In today's video, find out how to combine technicals and fundamentals to catch a huge move on gold like we did here just recently during the recent situation in Russia and Ukraine. We've been trading commodities. Let's talk about how we combined technicals and fundamentals. Welcome back to the channel, guys. We're going to be talking a little bit about a gold trade that was taken within our VIP Discord channel and how we were able to catch a 6R position here by combining the technicals and the fundamentals, which we're going to talk about in detail on each component. We're going to talk about the technicals first, and then we'll combine it and bring it into full force with the fundamental side of it and the risk that we had to take with the account, etc. So let's dive in. So here is the first thing I want to show you guys. Here's a view of the chart. We're taking a look at gold on the 1 hour screen. And what you'll take a look at is that we had a really explosive move higher on the gold market, actually going from 1820 all the way to 1879 very, very quickly. This was an incredible run to the upside there on gold. You may be asking, what was the fundamental catalyst? Well, right at this time, we had a huge explosion in oil, in gold, after Russia basically had started invading Ukraine. Of course, that's not something that we want to necessarily profit off of. We're just trading the markets and going with what we see. So of course, when a market is making moves and high volatility is there and we have a fundamental catalyst, we were looking for opportunities, just trading what the markets were presenting. So here's the idea. Overall uptrend, we had a pullback to the supportive level here at the 50% level. And again, we had that fundamental catalyst, commodity prices rising due to supply issues in Russia and Ukraine, or because of the Russia-Ukraine situation. So I ended up taking a long trade here. You can actually see the green line there is my buy trade. So here was the trade alert that I shared inside of the group. Basically, I was risking just 80 pips. So if we take a look here, you can actually see that very quickly this market moved in my favor. So actually, if we back up just for a second. So this spot right here, you can see the entry one more time. 50% retracement, level of support there around 1850, and I ended up going long right at that green line with a stop loss of about 80 pips, just shallow, just below the 61.8% retracement. So that was the idea behind the trade. Now, again, here is the trade analysis. I shared the full breakdown here within our VIP group and basically went long gold with a relatively tight stop. And what you'll notice here on the next slide is that very quickly price rallied off of my level and I was able to lock a break-even trade in very, very quickly. So you can see my initial trade right around here where it went long on gold at the 50% level. We had a little bit of attempt to go lower, but not too much, and was able to stay in my stop loss by a slim margin, but still nonetheless was able to keep that stop from getting hit. Price did end up rallying, and at this point, once price had moved about 1.5 R, or 80 pips being my 1 R, right? So we moved 1.5 times that distance. I went ahead and moved my stop loss to break even, just locking in the risk on the trade, saying that from here, if the price does completely react negatively, we don't take out that high or anything like that, I will go ahead and stop out for break even, as the trade at that point would be nullified. So again, we're combining price action here with a catalyst. Lots of momentum on this chart, and I loved how price basically moved very quickly from my entry. Those are the kinds of trades that I love. Those are the scenarios which I'm looking to capture those nice reward to risk ratios. So we'll continue on. Here's the next point. So you can actually see we took out the previous highs at 1879. This is about a day later on the trade. And you can see 1879.642. That was the previous high point that we've got marked in this green dashed line. And you can now see where my entry has very much moved away from us, or price has moved very far from my entry at this point. We've dramatically made it move higher, a big push to the upside. And now, not only have we retested the highs, but on this green candle here, we made a strong impulsive move past those previous highs, and at this point I felt comfortable going ahead and moving my stop loss up just below this previous top. So once we broke this level, my thought process was this, in terms of a stop loss placement, was okay, we've broken that high. I don't really want to see price come back and collapse back underneath that. I'd really like to see that high now hold as a supportive level. So we broke it on the retest, or we broke it on the resistance level, right? We broke out to the high side, and at this point I really didn't want to see price come back more down below that level around 1879. So I went ahead and locked in my stop at about 250 pips on the trade from my initial buy entry at that 50% retracement. So again, here's a little bit of the update, basically highlighting that we broke through the highs at this point. This is 2 days into the trade. You can see here I entered it 2 days ago at the time of sending this on February 17th. And at this point, the targets that I had mentioned in the past trade updates for where we would start trailing stops had been hit. So you can see there's my trade on MT4. And at this point, I locked in about 247.30 pips on the trade from my initial entry. Okay, so things continued on. We did in fact see a higher low come into this market. So right here, if we zoom into this spot, you can actually see, so we actually made a higher low on this market. And then at that point, I basically decided that we had made fresh highs, we had held a higher low, things were looking optimistic. And as long as this bullish structure was still in the market, I wanted to stay in the trade. So I've still got a stop loss. I'm not using a strict target. I'm just trailing using price action. After forming this higher low, I went ahead and moved that stop loss up about about 330 pips. So I'm floating more than 330 pips at this point, but I am just going ahead and locking in just below this structure point where I would stop out should things kind of reverse on me. So if price had dropped like crazy here to the downside and we saw massive momentum back the other way and we broke through support, I would have very quickly stopped out and taken my 330 pips profit. Okay, so next we enter into a phase of consolidation. And at this point, I'm not too worried, but I know that I've got to be a little bit patient here. So we've got war concerns around the world, of course, driving prices up higher on commodities. And, at this point, I'm thinking, okay, price is either going to break out higher and the story is going to continue in terms of concerns around the supply line issues surrounding commodities, or things are going to break back the other direction, at which point I will still keep my stop loss in the same point. So we're still trailing the stop loss at the same point, right around 330 pips locked in, but we've now highlighted this level of support where price seems to be reacting well, but we are entering just into a consolidation phase. So I'm not freaking out, I'm not taking profits, I'm not closing things because I'm nervous. I'm just letting the trade do its thing and hold this level of support. If it breaks it, I'm out. If it breaks higher, we'll look to continue to rinse and repeat this process. You can now see that we are very far from the initial entry. So the initial entry down there at support around 1850 has held very well. We've trended higher and continued to make higher lows. And at this point, we've just, up to this point, been trailing stops from a technical analysis perspective. Okay, so then things get really interesting. We have more war fears intensifying. Again, we are not here rooting for war. We're just literally trading the momentum and the catalyst that we see. The point is not to profit from a situation. I know that people are, a little bit weird about that. And it does, when you objectively look at it, it's like you're trading during this time. It's a bit of a weird concept, but just markets do some crazy things. There's market crashes on people, losing their businesses. It happens all the time, right? Big crashes, big rallies. It's just the markets at the end of the day. We're not, taking anything personally. We are just trading the opportunities that are presenting themselves in the market. That's what we do as traders. That's kind of what we're focused on. So big intensified fears mount, and that causes the commodity market to go up into space. We see a major break higher, and now that consolidation zone that we marked, now topping out around 1910, has broken out completely, passing 1920, 1930, 1940. And at this point, I take an opportunity to go ahead and trail that stop further, putting my stop loss just below the top of this consolidation zone, right around that 1910 level. Excuse me, I did not want to see price come down much further than that. So that's kind of where we're at with the trade at this point. I've locked in 491 pips. Price is moving really fast. We're looking like we want to try and perhaps even head up to $2,000. We'll see if that happens, of course, in the next slide. But the main point is we went ahead and locked out more of the trade here using structure, just trailing behind this previous high. Okay, so here's again an update. So this is 7 days into the trade. So you can see entered 7 days ago. These are swing trades, right? So some of these moves we're not looking to capitalize on in an hour or so. We're looking for bigger moves. We're looking for swings that could last anywhere from 5 to 10 days. So again, another big move on gold. This is kind of at the same time. We're floating around, a significant move higher. We're floating 637 pips at this point, and we've locked in 491. Things are really optimistic, and bam, we get a little bit of a pullback, and now this takes us out of the trade. So officially, we are now, you can see where we stop loss, the stop loss was hit. Prices normalize and pulling back a little bit after all of the volatility heats up. Sometimes we see these crazy moves one way, just followed by an immediate move back the other. but not always. Sometimes you see those moves continue. So that's why we were just trailing stops, letting the market tell us when it's time to hop out. And this was our cue, right? So the 1910 level did not hold. We saw this level break down, hits the stop loss, and we are officially out of the trade for a total of about 491 pips. Now, that was a lot of technicals. That was a lot of what happened there. Let's talk a little bit about the current market environment and kind of why we took this trade, not just from a technical perspective, but why were we long biased? What told us to be long biased on gold when we took this position? Okay, so we had a heavy focus on risk off at the time of taking this trade. This was a trade that we took in a situation where we were not looking to buy stocks, we're not looking to buy risk on assets. We are looking to go with the flow, risk off, buying safe havens like USD and gold. That was pretty much what we had been touting all week on the channel, talking about that over and over again. Russia invading Ukraine, of course, is a serious development. The first European major war since World War II. That is nothing to overlook. It's a serious concern for, global economics. It's a serious concern for, people who live in Ukraine. Of course, it's a terrifying situation, and markets were reflecting it. So we were looking to just kind of go with the flow for the time being. And see if we could just kind of go with that flow until things turned around, which at the time of making this video, weeks later, they still haven't. So we've just been going with the flow since then. But again, we're just covering this trade, so more videos in the future. So basically, Russia invades Ukraine, market sells risk-exposed assets. Things like stocks are down heavy, and safe haven currencies fly. Things like the dollar, and maybe more importantly to this trade, commodities are floating higher. And at this point, they have already moved higher, but I want to be involved. So this is kind of going back to the initial point of the trade. We want to be long on commodities, but we're looking for opportunities to do so. That's where the technicals come in, as we mentioned before, looking for pullback plays, fib levels, things like that, support and resistance. But again, supply line issues are the primary catalyst for strong bullishness on commodities. So my outlook is basically aggressively looking to buy dips. And I say aggressively, I don't mean risk-wise. I just mean in the sense that I'm willing to take shallow retracements. I'm willing to take any dips that I can find on these markets until further notice. That's what I mean by aggressive. Not aggressive risk. I'm still risking small, as we always do. We'll talk about that in just a second. But looking for exclusively risk-off assets such as USD, gold, etc. And gold caught my eye especially. I wanted to be long on gold, and so that's kind of where we looked for that. So here's the thing. Let's talk about the edge. Where was the edge in this trade? Why was the trade taken in a way that, we caught something where we could define kind of an edge? Well, the market doesn't like uncertainty. We know this. Markets are they don't like when, the Fed is looming about, Fed rate hikes, or earnings are rumored to be bad. The market doesn't like that. They sell rumors, right? They sell fear, before anything happens. And so that was kind of the environment. We were looking to go with that flow, just, basically taking advantage of what the market was presenting, which was a risk-off biased environment. So we use that, right? The environment tends toward risk-off assets floating higher until something changes. So we have no news of something changing. For the time being, we're looking to go with the flow here and do what we can to be a part of this move. So we're watching price action for pullback setups, as we mentioned earlier, for high probability setups, combining both the technicals, right? So we have a fundamental bias for risk-off, but then we also have the technicals where we're looking for great entries with tight stops to maximize the potential reward that we can make from the risk that we've got to take. Speaking of risk, let's discuss this. So despite the great technical setup and fundamentals that this trade had, it could have still lost. We talk about every single trade that we talk about inside of our group has a stop loss for a reason, right? Things go wrong, markets shift. For example, what if suddenly the fundamental outlook was bearish, but then we had suddenly a big, announcement of peace talks and things progressing very well between Russia and Ukraine? That's a situation we all want to happen, but in terms of just our trade, that would have reversed things, right? So we didn't expect that to happen. Of course, it did not happen, or it hasn't happened at the time of making this video. But that is something that could have shifted. Something could have changed the trade dynamic. And so we always take into account, what if the markets do something totally unexpected and they go the other way? We've got to be prepared for that. That's why we risked that 80 pips initially. So what if my entry was off? So again, we talked about the fundamentals, something could shift, but what about if the technicals didn't quite line up the way we thought they would? What if they reversed, right? What if they just don't quite hold the zone that we looked at? We've got to keep that stop tight so that we don't just hold on to a massive loser. So despite being confident with this idea, I only risked 80 pips, which on gold is quite small, which of course ends up being my 1R or 1 times my risk of 80 pips, which in this case ended up being a small 0.5% trade. And I was ready to, the point that I made earlier, very important, keeping those stops tight. I'm ready to cut this trade as soon as I need to, as soon as it breaks and shows signs of failure at a certain level that we talked about earlier in the technical portion. So with this trade, I was able to risk 80 pips with a technical entry, and as price ran in my favor, as we saw in the example or in the screenshots earlier, I basically trailed stops and updated members of that 490 pips that we were able to lock in through trailing the stop. So 490 pips divided by that 80 pips initially risked gives us about a 6.125 risk to reward, meaning that I risked 1 and ended up making about 6.125, which again, risking about 0.5% came out to 3% gains from one single trade, which on a larger portion, larger size account is great. I know it might not sound very impressive on a tiny account, but when you're working with larger capital, 3% is not bad. So that's kind of where we were at. Guys, don't miss our next trade. These are trades that we are sharing. I've showed you guys some screenshots of the VIP group and what these trades look like. We share the full breakdowns, but you get a whole bunch of free things inside of our free Discord, which we can also link down in the description. But the VIP group is actually going to get you access to seeing the trades that we're taking and why we are taking them. The full breakdowns, get real-time notifications straight to your phone. If you would like to join our VIP group, there is a link down below in the description. And if you have any questions, you can send a message to one of our representatives linked down below in the description as well. Again, every trade comes with a full breakdown, the entries, the stop loss, updates, things like that. So if you're not already in the group and you would like to see these trades in real time and work with us a little bit closer, check out all the information and sign up down below in the description. Thank you very much for watching today's video. If you enjoyed, make sure to subscribe, hit the like button if you want to see more of this sort of content, and we'll see you next time. What's up, guys? Thanks for watching today's video. There are more videos available on our channel here and here, so go ahead and click into that for some more free trading content. With that said, thanks for watching. We'll see you back next time.